What is my silver price prediction for 2023? Let's take a quick look and hit the big red subscribe button to stay updated throughout the year. Hey everyone, it's Joe from Ainslie's Gold Silver Standard Insights, brought to you by goldsilverstandard.com and ainslieBullion.com.au, the first technical analysis video for 2023. Happy New Year, everyone. And I thought I'd do a macro view. Let's do a silver price predictions. I'll put that in quotation marks. I don't usually like to use the word predictions, but it's very good for the YouTube algorithm. But I will give my, I think, reasonable price targets moving higher for silver just for this year, for 2023. What are some of the reasonable price targets moving higher? And of course, we'll look on the opposite side. If we are going to go lower this year, if we're going to close lower, what the potential price targets moving lower might be as well. But in order to see where we are maybe going to go, we need to take a quick look at where we have been. Now, if you don't care about history, then you can, I'll hopefully put a time code so you can skip to the here's where I think we're going, or where we might go in 2023. So hopefully there's a time code below, and you'll see that if I can sort of find that correct time code. But we do need to go quickly back in history, take a look where we've been for the context of where we can potentially go for this year. So this is silver on the yearly time frame. Each candle represents one whole entire year. We're currently at $24 US. Of course, it is priced in US dollars. We're using the tradingview.com website, and what I wanted to point out at the start here is, of course, this is based on the spot price only. This is not taking into account premiums, either premiums lowering from bullion dealers. It's not taking into effect the physical precious metals price, of course. So who knows where premiums might go within the next year. Premiums may go higher, premiums may go lower. So just bear that in mind. It is based on the spot price only. So let's go back to reasonable data. Now, reasonable data starts at around about 1967, right here, $1.30. Okay, of course, you know that we had the big spike in 1980, 1979, 1980, the huge 700% move between 1979 to 1980, all the way up to $48 roughly. A huge consolidation down to about $3.50, and that bottomed around about in the early 90s for a few years, and then we have tracked up since then. A bit of consolidation range right there, a bit of a range, and then we tracked up all the way to 2011 right here in, I've forgotten what month it was, but we topped out at, and we all thought it was going to go higher and higher. I was in the precious metals then. Were you in the precious metals then? Post a comment below. Did you think it was going to break the old $50 level? I really thought it was, but unfortunately not. It was a double top. Since then, I move all the way back down to, and it held for a few years, and I'll show you this a bit more specifically when I do a little bit Fibonacci analysis, but it held this $14 level roughly, and now a move up to that $30 level, and currently at the $24 level. And we had technically a green year. It closed a little bit higher last year, 2022. Let's see, we opened at, just out of interest, we opened at, if you can see that in up the top there, opened at $23.30. We had a high of $27 right there, a low of $17.50, but we closed a little bit higher at the $24 level, round about where we are right now. So I like to use Fibonacci. If you find it a useful tool, pop a comment below. If you don't find it a useful tool, pop a comment below. We always want to hear from you from different perspectives. I do find it, again, I don't like to use the word predictive, but it does show you where prices tend to cluster for support and resistance. So let me show you that on the big macro time frame. I'm still using the macro high of 1980 and the macro low of $3.50. Why? Because we have yet to break out of that significantly. We haven't really made a new all-time high in silver. It broke a tiny little bit above, but you couldn't call it really a significant break above the previous all-time high in 1980. So I'm still using this high and this low, and for good reason as well when I show you what it is. Let's go, it's roughly 48, that's probably close enough. And let's take it down to that $3.50 level. I think that's probably close enough. Now, can you see it already? I can. I've had this chart. I've looked at this Fibonacci chart for quite a number of years, and I can certainly see it. Now, can you see it? Of course, I think you can. But let's quickly go through it. Okay, so after 1980, you had that move all the way down to, let's see, after breaking the 23.6, that $14 level, it acted as resistance in 1983. Between 1983 to roughly 2007, we were in that range of $14 to $3.50 all the way through there. We finally had a test of the 0.236 Fibonacci level from this high and this low, the $14 level. We had a test of that in 2006. It was a failed attempt to break significantly higher, so we had a move back down below at around about $11. Then actually closed the year at above the 0.236. It closed above that $14 level. Now, here's 2008. It had a big move below. Why? That was a black swan event in 2008. It was the global financial crisis, the GFC. So that's what brought it back down. It spiked down to the $8.50 level, roughly. Now, I would argue that if the black swan event of the GFC did not occur, I don't believe, look, hindsight is 2020, of course. I don't believe, based on this candle and this candle, and particularly because we closed above on the 0.236 right there, closed above $14. If we had not have had the GFC, I don't think we would have seen that spike below that $14 level. Of course, again, who knows, right? But that's just my personal feeling on that. I think it's valid, but that's my personal feeling. But in 2008, we had a spike up to, before we had the GFC, we had a spike up to, what do you know it, the next Fibonacci level, a resistance level. It wasn't exact, but it's around the sort of ballpark level of this Fibonacci of here of 0.382 at around about your $20 to $21 level. So a resistance point at this Fibonacci level right here. In 2009, of course, we had the spike below, so the black swan, and then we opened at around about $11 and a pretty quick move back above. So again, I really think that black swan was the only reason why it went below $14. Quick move above $14, came close to the 0.382 Fibonacci level. It didn't break out. A move back down close to the support. Again, not exact, but ballpark support of the 0.236 of $14. And then in 2010, whoo-wee, look at this, what is it, 100 and something percent move. Right there, 112% move. And where did it close out? On the yearly time frame at around about ballpark. It closed out ballpark at around about the 0.618 Fibonacci level at around about $31. I think technically it closed at, if you can see, around about $30.93. Around about your $31 level, give or take, a few cents. So interesting, right? Another resistance level right here at another Fibonacci level. Okay, so in 2011, we had the move, the big spike, sailed straight through this Fibonacci level, the 0.786, and made a play. And we all thought it was going there, didn't we? We thought it was going to go higher, but no, it was a double top. So it topped out at this Fibonacci level, technically just a double top right there. And if I'll quickly show you on the, let's do it on the quarterly. You can see here, right there, the quarterly. So this was in April of 2011, where we topped out at $50 and sailed right back down to, what do you know, the $26 level happens to be the Fibonacci level. Again, not exact, but really, really ballpark, from this old Fibonacci high of 1980 to whatever, 1991. So again, I think it's not absolutely predictive, but it's a good ballpark. So we had here, let's go back to the yearly. Again, if you want to skip ahead straight to where I think the price is going to go, again, I'll put a link below. Hopefully there's a time code to that if you don't want to go through all this past history stuff. So a bottom for the year of 2011 at the 50% level of that $26 level right there, 50% level on the Fibonacci. A double bottom technically, right there in January in 2012. Again, it acted as support in 2012, the infamous $26 level. We made a play for, but it was a failed move to break out, or to this was a resistance level, I should say, at the 0.786 of $38 roughly. In 2013, we made a second attempt. So this did not hold, and so it has a fast move back down, and it closed. Let's see, it closed at, in 2012, closed at that $30 level. So it failed to hold above as support this Fibonacci level here of the 0.618. So 2013, it was a failed attempt to break above once again. Oftentimes from a failed move comes a fast move in the opposite direction, sailed straight through. And we thought back in 2013 that 26 would never be broken through again. I thought, in particular, a lot of us thought it. We're talking about the $26 level, massive support level. Unfortunately, it was a failed move to hold a support, fast move to the downside. So we did not find support here at the 38.2, and it's just kind of ranged in between, so you can't really call it predictive for that year in terms of the Fibonacci. But in the following year, 2014, an attempt to break above this Fibonacci level here, a failed move, a fast move down to, what do you know, the 0.236 of the $14 level. And as I was speaking about before, another 5 years, 5 years of holding this level as support, just like we held it here in 2008, and we had the black swan, which brought it back down in 2007. Black swan of 2008 brought it back down below this $14 level, but we had 5 years of support of this 0.236 at $14 level Fibonacci. And it ranged in between. It tried to break above this Fibonacci. It acted as resistance once again, your 0.382 resistance at around about $21. And it ranged for 5 years through there. And then we had a nice move in 2019. So 2019, we opened at the $15 level. We had a support again at that $14 level. And then we had a move, a play for this next Fibonacci level. It was a failed move, so we closed the year at around about that $17.80 level. Now, 2020, here we are. Technically, it is a green candle, but with a big spike down below the 0.236 level of $14. So a spike below here in 2008. What happened there? Black swan. Spike below in March of 2020. What happened in March of 2020? We all know it was the COVID crash. So similar to 2008, I think this would have held if it weren't for the black swan event. It was a very quick wick down. So a beautiful move back up. You can see it attempted, again with this Fibonacci, it attempted to break above, but it did not. It was a resistance point, roughly ballpark, of that $31 level, the 0.618 Fibonacci level, again from this old macro high of 1980 and this low here of $3.50. It was a failed attempt, a fast move down, rough support again of that 0.382 of that $21 level. And just in 2022, we had an attempt to break above here. It was a failed move to hold above $26, and we closed at the $24 level, and we had this spike down, a very quick spike down below this Fibonacci level of the 0.382, spike below down to $17.80, and we closed at $24 roughly, and now here we are. So that was the past, okay? I just needed to show you that, in order to show you that, in my humble opinion, and you can please disagree with me if you do, but I do find this macro Fibonacci from 1980 to down here, the lows of the early 90s, to still be somewhat quote unquote predictive of the price on a very macro view. Again, this is the yearly time frame. So now let's talk about my prices. You've hit the time code button. Let's talk about my prices potentially for 2023 only. We're only talking about this year right here, this one candle. We will not talk about subsequent years, etc. We'll just talk about this year. What are my price targets moving higher and my potential price targets moving lower if we're going to spike below, or even if we have a close of the year. My humble non-financial advice opinion is that a lot of people believe that we are going to be going through a recession in 2023. In general, not always, but in general, gold and silver tend to do well in recessionary times. Black swan events, obviously that did not occur then, although it was a quick spike below, and then we had a quick recovery the following year. But in general, in harder times, gold and silver, precious metals are a safe haven. They tend to go higher. As I said before, I think 80% chance that the bottom is in, so let's base it on that. Based on the sort of average candle, green candle movements, let's take a quick look of sort of an average price. Average green candle year. So let's take this year right here. That was a 50% move. So if you had bought at the bottom here at $14 and sold at around about that 0.382 Fibonacci level of $21, that's roughly a 50% gain in that year of, what year was that? 2016. So 50% right there. This one here is about 30%, okay? This one here, we've got around about 40%, okay? No problem. You've got a big one here in 2019, but again, that was the black swan. Let's presume, let's do a bit of, this is a bit of a presumption, right? I'm going to presume that the black swan did not occur and that we just opened here. And let's just take it from the opening to the top right here. That is a nearly 70% move. So it's not unusual to have decent moves, 50%, 30%, 40%, 70% move, green candle years, etc. In 2022 alone, we had this move of, again, around about 50%. And let's just take some of the larger ones as well. In the big bull run let's see, from around about your early 2000s, let's take a quick look at those. So, okay, you've got a 40% move right there. You've got this move roughly again 40%, so it's pretty average, right? And this move here, 70% move. And then you had the GFC, and then the big ones. So these are the sort of the outliers. You'd call it the 80 to 90% in that year. And then you've got the big one right here, 2010, 112% right there, 110, 112% right there. So we can average, let's say, 40 to 60%, maybe if you want to call it 40 to 70% as the general average. I would even call it 50 to 70% general average. So let's stick with that, 50% to 70% general average on those green candle years, with the outliers being, your little 30% one there and your bigger ones like your 80% and your 100%. So, and let's also take it on the Fibonacci as well. Here is my first, it took me a long time to get there, but here we are. Here is my first target moving higher if we break above. Now, break above these levels. So first, of course, in order for me to be 100% confident that the bottom is in, I need to see it break above and hold above the $26 level. So I'm not going to include that as a price target, top price target for the year. I think, personally, if we break above, if we have a test of $30 again at this 0.618 Fibonacci level of around about your $31 mark, I think this year, if we have a test of that again, I think personally we will probably sail through that, because we've had a test in the last few years. We had a test here of $30 in 2020. We had a test of it in 2021. I think third time might be a charm. Now, of course, I could be wrong, and maybe $30 is the top for 2023 and then we head back down. I don't think so. On balance of probability, more than a 50% chance. I think if we come up to the $30 level, I think we would have another test of this 0.618 level, of the $31 level, and I think if we have another test, we would probably, more likely than not, sail through it. So what is the next price target? Right here, let me show you. I'm going to draw it in. This is my first price target and my reasonable price target for 2023. Right here at around about, and you knew it was coming, but around about here at your $37 to $38 mark. That is my first price prediction for the silver price topping out at in 2023. If you take a look at this on the macro view, the yearly candle, that is definitely well within the realm of possibility of hitting that target very, very easily. Could do it in the next 12 months. $37 to $38. Why? Because a couple of reasons. Of course, this Fibonacci level here, the 0.786, it has hit it close to that before. This was in 2012. It was its high. You can actually see here as well, back in 1980, it actually closed around that price. It opened around that price. So if we actually take a look on the quarterly, what you're going to see here is around about here. You can see it sort of acted as a bit of resistance. Maybe I need to put it on the monthly. Let's take a look at 1980, round about, right there. You can see it, a bit of a resistance level right there, but I just think that is the next most likely, the first target that is. So let's go back to the yearly. Thank you for everyone for your patience. And we'll find it right there. So my first price target, and I think it's reasonable. At least I think if we have a good year this year, reasonable price target is around about your $37 to $38 level. If you want to call it $40 even, okay, do that. But around about this level here of 37 to this Fibonacci level, could spike a little bit above. That's the first price target. And what is that in terms of its percentage from where we are right now? That is a 60% move. That is well within the average, of my humble opinion, of your sort of your 50 to 80% average green candle years. Sometimes a little bit less, sometimes it's more, the outliers, but 60% well within that. So if we spiked up to 60% and topped out at around about your $37 to $40 level this year, that's par for course as far as I'm concerned. So that's the first price target. Now the next ones depend on where the world is going. Oh, actually no, I'll say even this one, the next one, I think, no, actually I will. Let me revise. The next one depends on where the world is going. So, and that's something we cannot predict. We don't know where the world is going exactly. We don't know, even if we're going into a recession, we don't know how bad it would be. Could we possibly, like many people think, could the eventual manipulation of the silver and gold prices, could that be revealed, and then we have a huge repricing of silver spot price? Again, I'm not talking about the physical price of silver and the premiums. They could change drastically, you never know. But just in terms of the spot price, if we have a bit more of a oh my goodness, what the blazes is going on this year kind of year, and every man and his dog is trying to get a hold of the physical and also the ETFs, etc. So they're driving up the price of the spot price as well, not just the physical price. The next price level. Okay, so here it is, and I think where are we? Right here. I think personally, if we break above this level, actually, so I better put this back in. Let me put that right there. Excuse me. Let me try that one more time. Let me put that back in right there. So that's that up to that first level, that first price target. If we do sail through there, and if we come to test the $50 level, I think more likely than not, third time is a charm, and that we would actually break above it. So if we do break above and hold as support this $37 to $40 level, I think we would make a play for, and we would break above, again, more than a 50% chance to break above the previous all-time high, because we've had it here. Third time, probably a charm. So then my next price target moving higher is right, and you can see it already. Oh, that's not very good. Right there at roughly your $75 level. Why? As you can see, that's a terrible line, but why? Because it's the 1.618 Fibonacci level from the old macro high of 1980 and the old macro low of the early 90s. And I think that is still in play. So that's definitely the next logical move for me, is around about that $75 to $76 level. If you wanted to comfortably call it the psychological value of triple digit silver, that's probably still in play for this year, but it's more unlikely than likely, I would say. So the two most likely is, again, more than a 50% chance of happening this year, is silver topping at the $37 to $40 level, or spiking above and having a top at around about that 1.618 level of around about $75. Let's talk about the third price target, and what I think you would see, and I'll actually get rid of that, and I'll get rid of that. What you would see if we do break above, if we do make a play above the $75 level, and then this is, I should say, this is if, you know, the world goes, it's the SHTF sort of scenario, where the world goes a little bit crazier and people are really clamoring for silver. You will, of course, see the psychological value of $100. Let's pop it in right there. That's just the psychological value. But again, I'm going to use the Fibonacci again from this high and this low. So the really crazy blue sky thinking target. Again, this is just for 2023 alone. I don't think this is likely to happen. I think the first one is the most likely, of that $37 to $40 level. The second most likely is that $75 level, still around about your 50% chance. And under 50% chance, but just have to make mention of it, is of course, why am I doing that right there? Let's get rid of that and we put that there. There we go, of sailing up to and maybe holding as resistance for a little bit, spiking back down, but this 2.618 of around about your $120 level. So those are my three targets, moving higher and moving lower. And let me pop them in with a horizontal line right there. So I'll pop it in around about there. Again, that's about there, $37 to $40. My next target moving higher, again, it just sort of, it doesn't just sort of, it does align with this Fibonacci level right here of around about $75. And you will, look, you will have a psychological value here. So I'm going to put the blue sky thinking of anywhere between, let's say, your psychological value of $100 to $120 of triple digit silver. So that's pretty much it. That is my personal silver price prediction for 2023 in terms of the higher prices. 37 to 40, 75 possibly, more unlikely, but you never know. But psychological value 100 to 120 US dollars. Of course, again, this is the spot price. It is not factoring in premiums. We don't know where premiums might go. Might they skyrocket because everyone's trying to get their hold of the physical stuff? Or are people just sort of your regular investors, are they still in digital land? Are the mainstream media, are they still promoting ETFs and things like that? So you've got to bear that in mind as well. But if the mainstream media is promoting buy your physical now, you've got to get your physical, if you don't hold it, you don't own it, then you could see the premium difference spike that price much higher in terms of the physical price. But that again, the spot prices moving higher. Let's very quickly talk about the potential moving lower if we're going to have a spike below this year or even a red candle year. For me personally, I think you can already see it. Again, I'm pretty Fibonacci heavy on the yearly time frame. I think if we are going to have a spike down, I think it's going to be roughly here at the 0.382 level of your roughly $20.50, $21 level. So I'll just pop it in there just for a right about there. So I think you could potentially see a spike down. You could even have, just like we did in 2022, a spike down before a spike above. So bear that in mind, maybe a spike down to this $20.50 level before moving higher, or my next target moving lower, it's going to be here. I think you can really easily see it at that previous support level, $17.80. So that's my next targets moving lower, and I really don't think, unless there is a black swan event, that is my absolute line in the sand now. On the yearly time frame, there is no chance, in my humble opinion, that there's no chance that this could go below the $14 level. I think, again, black swan here in 2020 of the COVID crash, just like the GFC of 2008. If those two had not have occurred, this $14 level, I think, would have been nice and cozy, and it would have acted as support. So I don't see it going any lower than that $14 level unless there is some kind of black swan event that pushes it lower. So those are my targets moving lower: the $20.50, the $17.80 roughly, and your $14 level. Targets moving lower for 2023, and my targets, I think, reasonable here. Somewhat reasonable here at 75, and maybe not, but let's see what happens in terms of the $100 to $120 level. And again, bear in mind, this is not financial advice, and we don't know where the world is going, and this is again based on the spot price only, not the physical price of the metals. The premiums could go crazy. You never know what's going to happen. So you could see prices around your 100 to 120 per ounce for the physical metal. You never know. But tell me what you think you know. Give me your opinion below. Where do you think the price of silver is going to go for 2023? I want your comments. Give your reasons. If you've got data to back it up, post a comment below. If you've got particular technical indicators that you like to use that you think would benefit myself, of course, please mention those, and I'll take a look at them as well. And please hit the big red subscribe button to get weekly updates on the silver price. Coming up in the next, I think, hopefully couple of days, I'm also going to do a gold price prediction for 2023, and also, if I get some time, a platinum price prediction for 2023 as well. So that's your silver price prediction for 2023. Please like, share, and subscribe. Hit the big red subscribe button to join us, and balance your wealth in an unbalanced world. Take care, and we'll speak to you soon.